Welcome to the Money Mentors Podcast.
This Money Mentors podcast is about helping you with your retirement questions. So if you have a question for us, reach out online anytime at matsonfinancial.com. We've checked out the calendar here, Laurel Taylor. Can you believe we're less than 3 months away now from April 15th? So
I know.
you know what time it is.
It's tax time.
So I'm already starting to get some of those tax forms, and it's time now to begin our annual special series on taxes this week here on Money Mentors. I was reading this interesting article this week about just how confusing even these individual tax forms can be that we're getting, in the mail. Of course, you have W-2s, that you have W-4s, 1099s that you're getting now, W-9s, 1040s, and variations of some of these. See, you know even more than I do. Very, very confusing here. Now, obviously, you two, you're not CPAs or tax preparers. You don't want to be those, especially this time of year. But when someone comes in, especially for those first meetings, they bring in a lot of financial statements, tax forms too. Is there anything that's helpful for you as you help them go over their retirement tax strategy when you're looking at some of these forms and form numbers that we mentioned there?
Yeah, absolutely. I'm looking at the 1040 mostly, right? That's the first page. That's your tax return. So I'm looking at that first page, and that's pretty telling. And then it's telling me, okay, no, let's go back and look at the W-2s, the 1099s. Let's go back and look at all these. Not that I'm questioning anything, but like, where are these sources coming from? Are there better ways that we could be pulling money out? Is there something in their tax strategy that maybe they're missing? So I would say, W-2s, the 1099s, those are really the biggest ones. Or if a client's still working and there's something way out of whack on their 1040, it's like, okay, well, maybe we should talk with your accountant and take a peek at your W-4s, right? What's your filing status? Oh, you didn't report that you do have 2 jobs, or that you're filing with too many deductions. There's a lot of things that go into it. Again, not a CPA, but we work with some really great ones. So I've learned a lot and done a lot of research on my own and our own personal stuff. So I would say the 1040 is definitely where I go first, and then that tells me where I need to go next.
We send out a checklist when you schedule a first meeting with us of just items to bring in. And we do like to see the last 2 years of your tax returns, because that gives us that baseline of having the conversation, like Taylor said, digging into some things, but also asking if there's something really different between one year and the other, why is that? What else was happening? Is that something that can happen in the future then? Especially if we're doing Roth conversion planning and you're a heavy bonus person with your company. Yep. What does all of this stuff add up and look like? And we work with, our clients, CPAs and tax providers. But if they don't have one, we have preferred providers to connect you with, because just like we talk about when it comes to our health solutions team and Medicare and marketplace insurance with advisors, you need to make sure that your CPA and your advisor are communicating. And you are responsible as the client, likely, to make sure that they're communicating. And we have found that it's just like ships passing in the night a lot of times. And one has one plan and one has the other, or really the tax preparer wants to take it this way and just wants the advisor to open up this quick other account and deposit some funds. But that's not a tax strategy or a tax plan. That's more of a reactionary thing. So we bring that in, and we want to once again remove that client barrier to say that you have to steer that conversation. We're going to steer that conversation for you to make sure that all of it works together, so there's no surprises on you or your CPA come tax time.
I would say, to piggyback off that, one big thing we look at in a 1040 is, where do you fall within your income bracket?
Okay.
And if RMDs are going to be a potential issue for you in the future, or maybe not, but you want to pass on a tax-free legacy, or you just want to simply take advantage of the good tax rates while they're here, we're looking at your 1040 and say, you've got $75,000 worth of gross income, so you're in the 12% tax bracket because you're a married couple. And the top of that 12% tax bracket is $94,000 roughly. We got to factor in standard deductions. Now, this is not advice. This is just a lot of generics, right. But that leaves about $19,000 worth of room in that 12% tax bracket that we could pull money out of that IRA, pay the taxes on it now, convert it to Roth where it's now growing tax-free, because likely your RMDs are going to be well more than that $20,000 in the future. And now you're in the 22, or what is today the 22% tax bracket. That's a 10% jump. Ooh, so wow. It's really a pretty basic equation. And once I get that put together, that's when I go to the CPA and say, hey, this is what I'm seeing. What are your thoughts? Is there something in their tax world or picture that I'm not aware of? And we get back to the drawing board.
why it's huge.
And it's not
to
a
have it.
one-time conversation, right?
Right.
We're going to continue to have this conversation too, especially if there's opportunity to fill up a tax bracket, do some conversions in future tax planning. And guess what? Taxes change. The amount within those tax brackets change, just like we talked about earlier in the show. So it's a constant game of revisiting your tax strategy.
I would imagine as president there at Matson Financial Services, Laurel, this is why it's important to have all these different pieces under one roof there, because absolutely all these pieces have to work together, it sounds like, in order to have a successful retirement. If one person's not talking to the other, a lot can seem to go wrong there.
Absolutely. And we take our role very serious. You know, we know that this is your hard-earned money. This is your life savings. It's everything that you're entrusting somebody to help you with. And likely you don't understand it all. So that's why you're falling on them. And you want to make sure maybe your plan is taken care of, but also what happens if you pass, if you have a spouse. Who are they going to feel comfortable working with? You know, they might not love finances and maybe you handle those things. So it's an opportunity to educate and mentor, especially with your kids and grandkids. And that's what it's all about. You know, here at Matson Financial for us is making sure we're providing the best service and the best recommendations and advice throughout your retirement. And you know, if something happens, you give us a call, right? That's what we're here for, is that constant relationship too.
We love getting your questions, whether you're a current client there at Matson Financial Services or you're a listener here on Money Mentors. And this week, actually, Taylor, Laurel, we have one about a popular subject here on the show. You brought it up here. It's Roth conversions. And looky here. So listen to this one. Let's see if you can tackle this for us this week.
I'm considering a Roth conversion, but is there an income level that is too high for a Roth conversion to make sense?
All right. How do you answer that one for us?
Oh, that's a really good one. Not necessarily.
Yeah.
There could be, depending on what future earnings and future income is going to look like, right?
Okay.
If you're always based on your income, your lifestyle, your needs, you're always going to be in the 22% tax bracket. We're not going to wait till retirement till you're in the 12 to convert, right?
Okay.
It may make sense to take advantage of it now. You know, we've got a couple clients that are in that position. You know, they're in the upper echelon of tax brackets, and it still makes sense to convert because taxes are not going to go down.
Right.
Now it's a matter of how much. And we don't necessarily want to jump up a bracket or two. It's about controlling where we're at and then also looking at future income and expenses.
But there is a time to where you might be earning too much money to technically contribute to a Roth, right? But that means there's still ways to go about it. It's called like a backdoor Roth IRA. So it doesn't mean, hey, you got to close that book and you move on. It's just not available. There's just different paths that we need to go down, different things that we need to do. And that's what we're educated on. And we'll work with your CPA to make sure all these boxes are checked so you have that good tax strategy as a part of your retirement plan.
Another piece to that is, let's say that you do make too much to contribute. Now, we were talking about conversion. Now we're talking about contributing to the Roth IRA. You meet with your CPA and you say, man, I'd really like to contribute to the Roth IRA. Well, you can't. You make too much money. Right. Air quotes, too much money.
Right.
Define that. They have a definition, I guess, for contributions. But you've got an employer plan. And you've got a Roth option in your 401k. That does not apply to the Roth, the income phase out rules.
Oh,
you could
okay.
still maximize that. And you're going to be able to put more in that Roth 401k than you could your Roth IRA anyways based on those contribution limits. So
okay.
everybody can have a Roth. It's just a matter of how do we make it happen. It's the logistics behind it.
Where there's a will, there's a way.
Yes, there is. Yep. You just got to figure it all out.
Get more in that tax-free bucket. And we like that tax-free bucket. We like talking about
love
it.
The tax-free bucket.
Right? Doesn't it just make you smile?
It does.
Want weekly lessons from your money mentors? Yes. Hit the subscribe button now and listen every weekend on Wood Radio.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Fee-based financial planning and investment services are offered by Matson Financial Services, LLC, an SEC-registered investment advisor. Insurance products and services offered through Lakeview Financial Group, LLC, Matson Financial Services, LLC, and Lakeview Financial Group are affiliated. To find out if Matson Financial Services is licensed in your state, please call 800-536-8907.